Hey guys, this is Julie. Take a quick look at the charts, catch up on where we might expect the market to move. Friday closed very on the low, really for the ES. Closed right on the weekly three, tailed down a little bit, and then popped back up. We'll take a look at the actual move, but closed above, just above our levels for the risk. So as long as they close above it, their puts are protected. Um, and so that was okay, barely. When we take a look for next week, the obvious, point of contention will be this monthly three. We've got end of the month coming up in 2 weeks, the 31st. So over the next 2 weeks, coming down to this monthly three. And then for September 15th, we've got the quarterly ones. So somewhere around 4038, 4087, 4100, we're going to want to look to see what type of puts and calls are available. So I pull up my quick strike real quick. Choose the end of month, the 15th, ESU3. I'm going to change this to my Black Scholes on the settlement. I can see 4380 is the midband, and that's right where we are. So we're right in the middle of that quarterly range. And we're actually below, just below the quarterly, upper quarterly one. So we're already in the middle part of this range. So if I measure my mean versus the implied volatility mean, 44.79.50 and 40.87.50, and then we'll do another one. So I can run my calcs from both the session open and the close. That's why I have two means. Alright, so this is the close. 44.30 and 40.38.25. So we've got 42.34.13 and 42.83.50. This 42.83.50 is lined up on the monthly three. So it looks like that is going to be a real magnet, sticky level, right? Oops. There we go. 42.83.50. And then, of course, it could pop down to this 42.34 because, we're running the session open and close. So it could pop down and come back up. But then definitely after the month ends, then we have some more room to get lower. And this would still technically be in an uptrend. You have not challenged the uptrend until this breaks at 40.38.25. So if you get below the 40.38.25, then you're right now currently below your weekly and daily levels and your monthly. So the quarterly twos and threes would be the support resistance overall. Um, if it does, completely break down, but I don't see that happening. We've got 5 GDP coming up. I mean, that's really good. So we need to keep that up and then bounce this market back up, new highs, right? The upper end of our ones are 47.25, 25, and 47.31. So that's your upper end of the range. And stranger things have happened. They do bounce on the twos and threes all the time. So we um, would confirm an uptrend when you're above the ones. When you're above the ones and moving out, you are, moving up and out. So you can see when that happens on these smaller time frames. So that's why I like to go to the smaller time frame intraday, of course, and pay attention to where we are relative to these levels. And you can pick up some great trade locations on these major, support resistance levels, Jats PT. Um, Friday, ES broke the ranges, broke the weekly and the 7 day briefly. And this is what the dip looks like. It even broke um, the one here that was a 8 day one. So it was like really starting to take off and look pretty red on my market analyzer. But with that said, I had some intraday levels that I was looking at that was showing that there was not any momentum, and of course that obviates the short position for me. So you'd want that momentum, wind at your back, and that did not happen during this period. Plus, your range was contracting, so it did bounce back up by the dip, and it did settle above the weekly three. So the spreads, although challenged, were intact. I mean, if they were using this weekly three as the risk line for a put, it worked. It closed above it. So, but definitely a little bit of a heart attack there for, I'm sure, many people. Um, Maybe when they were, concentrating on these NQ levels. That's what will happen a lot of the time. Um, but NQ did not get down to the threes, um, missed them, so in fact it closed above the weekly two. So the NQ was not as low as the ES, closing on the weekly three. We closed on the weekly two. So that's interesting. And NQ, stayed above some of these threes as well as support resistance. And of course, our ever so fabulous Globex levels act as support. You can't break a range until you break these Globex levels. So we had, you know, momentum going long off this bottom, and it did make its way up, sort of bouncy. So the Globex 1 caught the top. And we have range actually expansion off this bottom going long. So that was the dealer pushing price above these weeklies threes. The VIX also ran out of room. Here is my 23, 30, 37 day levels, and we broke the 23 day stopped at the 30, came back in, and did not get up to the 37. So the 30-day ones held the volatility very well. And we're still above the ones, and that would lead, if we get a bounce in volatility, to higher, of course, downside movement in the equity indexes. If we get back inside the ones, then of course the equity indexes are going to go long. And we'll just be able to figure that out by measuring the distance of our volatility, what the ranges are actually, what we're looking for as far as weekly, daily. So we can put the PT oscillator on the chart. And the PT oscillator will allow me to put these higher time frames on here, so I can have a weekly, and I can also have a, oops, don't want that, I want the two, a daily. So here we can see we have a daily, weekly, and we're up to, $1.48, 253 ranges. And if we look from the week, you're going to see that we actually broke range um, by two, almost. So the range is actually 253 because we had been so contracted, right? So everything above this level right here was the extra. And the daily range was $1.48. So there you go. On a daily range above the weekly. So there's your daily, there's your weekly range. We went one daily range above the weekly range. And then it came all the way back down, back to the daily range. So that is an interesting top for that volatility. And Bukowski has a website. Show that to you real quick. Bukowski chart patterns, V top. So there is the V top, like this, like that, and it's bullish. Um, and it's showing that it's going to go back up. So sometimes you do get a drop and pop, and if we do get a drop and pop, I would think that it would be bouncing on this white lines here. Maybe 1730 would hold it, but if we do break, it would be this top of this weekly, somewhere here, that drop and pop. But I am looking for more upside volatility, and very soon. I would certainly think no more than this first standard deviation of the daily 106. maybe maximum drop. There's 57. So that's PT1, 53. So we could probably get excited about seeing some increased volatility if it does do the drop and pop. But definitely Bukowski's chart pattern seems to indicate that this is going to be ripping. So ripping and dipping. $1.48 going up. So it's 1.5%. So we would get up to the threes, 1878, 1890. And I just want to look back at my 1878, 1890. 1938 is, the 37-day one. So anything above 1938 is going to be the high volatility. And we haven't done that in a while. It usually stays inside the ones. Occasionally it does break out. So here it went all the way up to the PT3. Here it went up all the way up to the PT3. See that? So you get those spikes. Here it spiked up and they slammed it back down. So what we want to look for is a potential opportunity up to this 2158, 2173, the first one. And then maybe we can have some more fun because there's two other ones right on top of it. Anytime you increase the volatility, you need to increase your risk or your bar size that you're trading on. Don't try to keep trading these really tiny 15-second charts. You'll get annihilated. You've got to broaden your risk out. All right, so we'll see what happens. Maybe we'll have a big gap up to the 44.11, and that would be interesting. We'll see what happens. But the crude, definitely worth watching. We had a weekly range of 445, and it got there, and then turned around, and pretty much every day hit our daily range 211. So, if we get into a path, you can, try to learn to follow that path around, especially something easy to trade like crude, right? It is a trending market for a reason. So get the path that it's going to be going on and project using probability on these average ranges, the distance to consider trading, and these 1, 2, 3 areas on these higher time frames. So I'm going to be giving a presentation coming up this next week that definitely want to have you register and sign up for. We'll talk about that in just a second. Go to my website and show you that I've got the Jats PT indicator and the price oscillator available for the NinjaTrader 8 platform as the PT indicator with tails and the price oscillator and the PT oscillator. And then in Tradovate and the Ninja Web, we can put the PT indicator and PT oscillator. We do not have the tails at this time. Going to be adding that at a future date. So these ranges can be used to trade both intraday and for spreads, puts and calls at these, common levels that the spreads are used, and that is your 30-day and your weekly and your quarterly. So here's an example of the PT on NinjaTrader, and Tradovate, so you can draw these distributions on the fly wherever you have access to an internet connection. No software download required. Jats ranges again. The PT1 is about 34% of the range, PT2 68% of the range, and PT3 95% of the range. Um, the ranges of interest for these 1, 2, 3 levels are on the 90-day, 3-month, 12-week, on the 30-day, 1-month, 4-week, and the weekly, 7-day, 5-day, 1 week, and the daily, 1 day. The difference between the 30-day and the 1 month, and the 90-day and 3 month, and the weekly, 7-day and 1 week, is the monthly, quarterly, weekly ranges are calculated on the trade dates for that period versus just drawing a numerical number 30 or 7 or 90, and that just starts from the day going forward. So you can draw the ranges in different ways, and it's very interesting when you do that because you can get some really interesting support resistance levels. The Jats PT indicator, of course, can be added to the market analyzer, and so you can create your own market analyzers, and I have plenty of templates to help you get started of showing the ranges on different time frames. So if you just like looking at levels and realizing that the day PT1, the low hanging fruit, has this much available, 29, 25 points. Where am I, in regard to that range, from the high or the low of that session? If the 1 breaks, it will go to the 2, right? That's your next target. So if you leave 29.25 points, do you have, where are you heading? Where's the next level to trade to? Well, it would be 58.25. And if you break 58.25, where might it go? Where is the end of my football field? Where's the end zone? It can go up to 81.50 points. So you can see that you have this potential between 58.25 and 81.50, and a potential between 29.25 and 58.25. So you can see where these levels line up using the Jats PT levels off the session open and close. But just keep your eye on calculating these yourself from the session high and low, because you might get some interesting turnarounds at those locations also, and it might give you some ideas of where to interact with the market or see if that is getting a response out of the market, because that can give you some leg room to move in a new direction, in an inflection point potentially. So you like to confirm those with something else, perhaps with volume, or like at a volume profile level or a moving average level, or one of my other higher time PT levels when it confluences with something. I like confluence. So the more confluence you can get at these levels, the better, because they are a really good support resistance opportunity that you might want to consider. So again, you can see that these are daily ranges, and the market responds to these 1, 2, 3 levels a lot, and especially the 3. You get to the 3, there's your target, and it turned around and came in. And the overall outside levels for your 7-day threes, your 8-day threes, your 30-day threes for your spreads. So you can not only use this to help with your options, selling puts and calls, selling premium, but you can also use it as, position trading, strangles, straddles, call spreads, and get a directional play off these levels, because, like I said, they often do signify areas of a turn, an inflection area. So, like right here, we got to the end of the level and it came back in, came up to the ones, this upper one that was actually a 1-2 combo, and it turned around. Great inflection area right there. So get used to using, calculating these um, ranges for time. We'll talk about that in the webinar coming up this week. So here is the price oscillator. You can also, with the Jats price oscillator, measure how far you're away from a moving average. So if you would like to use the 200 EMA as an example, you can see that you can set it to give you a signal when price goes outside the 200 EMA. So that might tell you that you're going to be coming back inside, right? And especially when it matches, the outside of your range. Here was a intraday range with a higher time frame range on top, and you can see that that worked out beautifully to show that that was the end of the road, and it came back in. It was a great trade reversal, RTM trade. And or you can, trade to your targets. Also, futures traders trade to target and then they bounce it back in. Give us a line and we will bounce it, right? In and out. Break or fade. And, most of the time it's fade. So, especially when you see that the threshold is moving back in, right? If your threshold starts moving back in, you're not going to be going out. And so you have your targets to trade to. Again, these levels, work all the time. I have tails on the Ninja 8 platform, so I can go outside the range and have a target to trade to, um, you know, and also use the price oscillator as a guide to know how far away from those EMAs on a regular basis, and do they hit the same levels over and over and over, these threshold levels. So if we hit a threshold level at the same time we're hitting a outside level, it might be a good time to come back inside the range. Here was your overextension. So you can see that the slope was just going sky high and went to, that was a Globex target. Oops, what happened to my screenshots? Went to a Globex target, Globex 2. Alright, so I'm out of screenshots. If you don't have the NinjaTrader platform or the Trade of 8 and would like this, you can subscribe to the Market Analyzer Excel files, and daily, weekly, monthly, quarterly levels will be sent to you by email. I have some good news. We're about to have a price reduction, and I guess I should have updated my prices before I made this video, but I will get that done. We're going to have a price reduction starting next week. So you'll be happy to see that these great indicators will even be offered at a better price. All right, so before we go, I would like to talk about EARN2TRADE. They have another great offer for you. The TCP 25 is being offered now at 90, so you have a 40% discount. Come over to the website, click the link, and that will take you over to get the information about the offer. And the TCP 25 starts right here. You got with your evaluation, end of day drawdown, daily loss limit, follow the progression ladder, maintain consistency, and then go into a virtual live sim account, which you don't have to pay your prop fees right away. You're still in a prop paying mode. Well, they'll pay you for your profits, but you don't have to pay that first month data fee. Very nice of them. So then you will, when you get to through your details, it's the same thing basically as the trial. When you reach your profit limit, or your, excuse me, your profit target, you're automatically enrolled in a higher tranche where you just do the exact same thing, reach a little higher profit target, and go immediately into the next tranche, hit that profit target, and then you're in a 200,000 account, and the fixed drawdown. So the drawdown will be fixed right up front. So that is helpful very much. That drawdown has nipped me in the bud a couple of times. So definitely consider coming over, getting the great offer at the moment from Earn2Trade. And with that, we'll see you. Let me give you the link. So it is Shark Week 2023. Um, Come over and see the schedule. We'll have some great speakers lined up. I'm going to be speaking on the 3 p.m. on August 23rd, time and volatility. So you can come over and reserve your place and check out my presentation. Appreciate that, and definitely check it out. So sharkweek.sharkindicators.com. All right, guys, we'll see you then, and thank you so much. We'll talk to you soon.